So this is the pound dollar analysis for Tuesday 31st of October. Now, let's just have a look what happened with prices on the 30th. So let's grab the pen just quickly. So we did see we had a bit of a sell-off from this round. This very important key level in around 32.81. This was the end of last week. We did come down to this weekly pivot in around 30.93. We did find a bit of a recovery. So when we did the analysis for the 30th, we were in around there. So we were still in a bullish territory in terms of this weekly pivot holding. We were expecting further upside. We wanted to see what price it did in around 31.47 and the 200 period moving average and the 400 period moving average here. So 200 in blue, 400 in black. Now, what we've seen is a pretty strong recovery in prices. As we can see, it's a very strong trend to the upside. The retracements have been quite shallow, which is good. That's what we like to see in a trend. We didn't have much of a reaction around the 200 period average, a bit of reaction around the 400 period average, had a small shallow retracement. And again, we do seem to be in a pretty strong trend to the upside. This week we are expecting news out on the pound. I think everybody's expecting an interest rate rise. I think the market's currently pricing that in. I suppose what everybody will be waiting to see is the degree of hawkishness by the Bank of England, whether it is a rate rise with a degree of dovishness. Could potentially see further selling in the pound, but if there is a degree of hawkishness, which I'm a bit, I think there will be a bit dovish, to be honest. Some of the data has not been positive in regards to the pound, but if we do see hawkishness from the Bank of England again, we're going to retake above these 32.81s. We definitely 33.50 will come into focus. Beyond that, 34.29 again. Depending on the degree of hawkishness, 34.29 before the end of the week on Friday is a possible target. It's only 200 and it's about 223 pips at the moment, so that's definitely attainable, easily attainable before the end of the week. To the upside, again above that, we'll be looking at 34.88. But just for now, before we do get interest rate decisions, I think this decision is on Thursday. So at the moment, we are in an uptrend, as I mentioned before. I'm on this execution time frame. I'm expecting price to come up to this 32.81. Up at 32.81, it is a very strong level, and we've had a few sell-offs before. It has held a support, so we'll see if prices hold at 32.81. If we do have a shallow retracement off that level before we have a retest and break for a move all the way up to 33.50 before we get the interest rate decision. However, if we do come up to the 32.81 and we do see some strong selling momentum, again, we'll be targeting this key level down here at 31.47, which is our major level, and also these possible the 400 and 200 period moving average, because in the past they have acted as dynamic areas of resistance in the past, so they could act as dynamic support. So we could potentially see prices retrace all the way back down to the 200, 400 period moving average before we have a continuation of the move to the upside to retest this 32.81, possibly breaking it after the retracement for a move upwards towards this 33.50. So overall, in light of us finding support in around 30.93, we've also got some dynamic support at 30.93 on the higher time frames, which I'm going to show you just shortly. We are expecting prices head up to test at least this 32.81. From there, we'll see what prices do, and beyond that, we'll be looking at 33.50 and the levels already mentioned above. If we do break down from where we are at present, we'll be looking to see if 31.47 holds. Beyond that, we've got 30.93. We've got a bit of a confluence here around the 31 and 30.93. Below that, we've got the 30.27 and all the way down to 130. That's currently the levels we're looking at. If we do see a greater degree of dovishness from the Bank of England, we could possibly see prices breaking below the 130 level, going on to retest to 128.80, and possibly even, I wouldn't say we'd get down to 127.74, but possibly even 128.80 might come into focus. So if we just go have a look at the weekly time frame, let's have a look at the weekly time frame. So on this weekly time frame, mentioned it before, mention it again. We are still in a bit of an uptrend. We are still respecting the 20 period moving average at the moment. Of concern, however, has been the deepness of these retracements. Most important of which has been the most recent one, all the way from 36.57. We've retraced all the way down to just below 131, which is a bit of a concern. We've not seen on this weekly time frame. The retracement has been quite heavy. We have seemed to have found support in around this 20-period moving average so far this week, and in with the confluence of the 30.93 level. So let's just see where the dynamic level of support, which is a 20-period moving average, that's most relevant at present on this particular time frame. I'm just waiting getting this scaling on here correct. So we've got this 20-period moving average currently sitting. It was at 131 last time, so let's just see where it is. Yes, it's at 131.06. So that coupled with the 30.93, we could potentially see some strong support there until we get the fundamental catalyst, which is the interest rate decision and subsequent press conference in regards to the pound. So overall, we are still in a slight uptrend. It's not very strong by any means, but it is still an uptrend. We have come down to a dynamic level of support in around this 20-period moving average. So if we do have a look at the daily time frame before we wrap up the analysis. So on this daily time frame again, we were saying we did find some resistance in around this area here. We did see some selling coming in around this 32.81. Just before that over here, we found the resistance in 36.57, and we've subsequently sold back down. Found support at the 400-period moving average, but we weren't able to break above this 33.50. So we have come down from 33.50. We've not exactly gone all the way back down to test this 400-period moving average or this 130 level marked out here in orange. Again, we did see some selling momentum coming to the market at 32.81, as it did over here as well. We've had a pretty strong candle closing here. It's low, but so far this week we've had a strong recovery candle in off the support of the 30.93 that we saw last week that was tested. So far this week, in light of the interest rate decision and so on, as we've found a support in around this 30.93, we've got a strong candle closing near its highs. We could expect further continuation to that level I've already mentioned, 32.81, beyond which we've already mentioned all the other levels. Again, we're going to see how prices react in around this 33.04, because as we can see here, we did have quite a bit of selling around 33.04 before we went all the way down to 30.93. So we could have a lot of bulls in around this 33.04, in between 33.04 and 33.50. So we have to bear in mind that level before we have the fundamental catalyst come out on the pound against the US dollar. So that should wrap up the analysis for the pound US dollar. So before I go, LCS, like, comment, subscribe. Thanks for watching.